Today I'm taking a look at mobile gaming app supplier, basically Skillz. Skillz have got a variety of fun little games, really designed for mobile applications, and it'll scroll through. So things like solitaire, blackout, dominoes, pool play. So they've got quite a variety of games going on there. But let's look into the figures. I got a bit of a confession to make on this one. This is one where I listened to a fellow YouTuber who, in fairness, has come up with some quite good predictions, and it's one I made the error of diving into without doing my own homework. So the lesson from this presentation today is do your own homework on and due diligence on anything you're looking to invest in, not taking the advice of some random guy on YouTube. Now, I'm sure that the gentleman concerned had good views with this, thinking, well, the turnover is going up year on year and the gross profit is going up year on year, all really great. But actually, when you put the figures in for the net profit is going down year on year. And again, it seems that the more the turnover goes up, the more the profit seems to drop. And that's not really where you want the graph to be going. And I'm sure maybe if he'd been doing this sort of graph, he might have gone, maybe I won't put my money into this. Assets versus liabilities. Assets are increasing. Liability has increased to some extent, but actually that's relatively strong. Capital expenditure has been very consistent over the last few years. And have a look at free cash flow, which is, ouch, massive negative and going worse. So let's jump over to SharePad and have a look at where the price points be going. This is a stock that went up from December 2020, soared up to a massive over $40 a share, up near the 45 mark. Where were we? Over 45, 46 there, 36. And since then, it's just gone down and down and down and down and down and down. I bought in around the $15 mark, somewhere around there, and started to dollar cost average down into the stock because I thought, well, okay, this is going to hit a bottom at some point. And then I stopped buying into it. So it just seemed to get worse and worse and worse. And we're sitting there today at $2.145. Compared to over $46, that is a horrendous drop in price over the time. So it's really turning into a bit of a penny stock. And I think it's something I can't do a discounted cash flow on this one. Simply Wall Street is indicating it's not likely to show profit for at least 3 years. If it does come into a profitable position, there could be a massive upside on this. But on the other hand, it's a company that if they continue growing the turnover and the net profit keeps falling, they'll just go bust. So, so the moral of the story of this one is when you're looking at investing any money in the stock market, yes, you can take some people's tips and what they're talking about, but you do need to do your own homework before you're investing. So do put your comments in the comment box below, and we'll look forward to receiving them and catch up with you again soon.